Stock market just saw its worst day since 2020. The Dow Jones fell by more than 1,600 points, and the Nasdaq is down almost 6%. Along with that, Morgan Stanley came out and said that it now expects the Federal Reserve Bank will not cut interest rates at all in 2025 due to potential elevated inflation because of tariffs. When President Trump was asked about this, he said that the tariff rollout is going extremely well. He said that it was expected that markets would go down, but the markets will boom soon, the economy will boom soon, and foreign countries will want to negotiate with the United States. So what I want to do in this video is talk about what's going on with the craziness in the markets, the craziness with tariffs, the uncertainty with inflation, the uncertainty with the Federal Reserve Bank, because over the last 24 hours, my team and I received so many messages and comments about what to do. So let me address all of that. Number one, the question that a lot of people asked is, should I sell my stocks? And what I want to remind you is that when the stock market goes on sale, this is when most people run. But when most things go on sale, people go towards that item. When Macy's has a sale, or Best Buy has a sale, or Amazon has a sale, people run and they get their credit cards out ready to buy. When the stock market goes on sale because people are panicking, people are running away and they begin to panic. And now I want you to start thinking like an investor. If you want to be an investor, you want to own a good investment and ideally buy at a good price. We've all heard buy low, sell high. Well, the problem with that is when markets go on sale, nobody wants to buy when it's low because people are panicking, and this is really no different. The thing that people are saying today is, what's going to happen to our economy? This is not like before. We're going to enter a worse recession. We're going to see a depression. We're going to see a collapse on the economy or something along those lines. Well, the reality is we have seen recessions happen in the past. We have seen a recession pretty much every decade for the last century. In fact, we have seen 16 recessions for the last century, which means we are averaging more than one recession per decade. We've seen more than 25 bear markets over the last 100 years. So yes, downturns happen. Yes, economic changes happen. Yes, there are a lot of similarities between now and the past. And yes, there are some differences. But what you have to remember is, what is your goal as an investor? Because if you are really a long-term investor, then you want to find good investments that you can hold for the long term. And if you can find some good opportunities, then that creates a great buying opportunity. But you have to be a long-term investor. And long-term does not mean 6 months. We are talking years into the future, because nobody knows what's going to happen tomorrow, next week, or next month, or even next year. We could see a recession. We could see a severe recession. We could see an economic boom. That's why it's so important for you to know your goal, and why it's so important for you to know your strategy. Then I want to talk about what's going on with the Federal Reserve Bank. Now, we've been covering all of this in Market Briefs. Again, Market Briefs is my free financial newsletter where every day my team is working to break down what's happening at things like the economy, the stock market, the housing market, crypto, and the global economy into a fun, witty, and easy to read newsletter. You can read it in less than 5 minutes every day, and it's completely free. Plus, when you sign up for Market Briefs, you'll also get access to a free investing masterclass. So if you want to get Market Briefs and the free investing masterclass, I got the link for you to join down in the description below. The Federal Reserve Bank is called the Federal Reserve Bank. They're the central bank in the United States, but they're not federal. They're not a part of the federal government. They're not a reserve because they're not sitting on any cash reserves. And they're not a bank because, well, you and I can't go there to deposit money. But they have the ability to control our monetary supply. More specifically, what that means is they have the ability to raise and cut interest rates. And normally the Federal Reserve Bank cuts interest rates as a way to stimulate the economy, and they raise interest rates as a way to cool down the economy. So when the pandemic happened in 2020, the Federal Reserve Bank cut interest rates all the way down to zero as a way to stimulate and boost the economy and spur spending. Then when we had all the inflation problems, the Federal Reserve Bank started raising interest rates to cool down the economy, to cool down inflation. Now here we're in this situation where the economy is starting to slow down. People have concerns about that, but the Federal Reserve Bank now doesn't know if they should keep cutting interest rates or not, because they're concerned about tariffs making inflation worse. This is where Jerome Powell, who is the chairperson at the Federal Reserve Bank, is saying that if we do see inflation from tariffs, it is going to be transitory. Why? Because the tariff inflation is not going to be everlasting, and that's why he's calling it transitory. But it puts them in a weird situation. Are they going to continue cutting interest rates, or are they going to continue raising interest rates, or what are they going to do? And we really don't know. In the most recent meeting by the Federal Reserve Bank, they said that they're still expecting to cut interest rates a couple times in 2025. But we know that everything the Federal Reserve Bank says is kind of a guess until something is actually done. Morgan Stanley is now saying that they're not expecting the Federal Reserve Bank to cut interest rates at all in 2025 because they think that tariffs are going to make the inflation problem worse. Why would inflation get worse because of tariffs? Well, because tariffs are a tax. And if you're a business and you have to import products from foreign countries, you have to pay an additional fine, an additional fee, an additional tax to bring this product into the United States. So if I'm making cars or shoes or whatever, and I have to pay an additional 10, 20, or 40% in order to bring this product here, I can either A, reduce my profits, or I can charge you more money. And if I'm charging you more money, well, that makes the prices of things more expensive during a time where inflation has already been a problem. Because inflation compounds. The inflation that we're seeing in 2025, which up until now has been higher than expected, the inflation that we're seeing in 2025 is on top of the 2024 inflation, it's on top of the 2023 inflation, it's on top of the 2022 inflation, it's on top of the 2021 inflation. And the reason why this matters is because the wage growth that we have seen between 2020 and 2024 did not keep up with the price growth of things. The reported inflation rate between 2019 and 2024 was about 23%, while the median household income in America grew by around 20%, which means if you are the median worker, if you're an average person, you might have saw your incomes rise by 20%, but the prices of things that you need grew by 23%, and these are the reported numbers. The real inflation that many people felt is oftentimes even higher than that, while wages do not keep up. So if your rent is 20-25% more expensive, your groceries are 20-25% more expensive, your flights are 20-25% more expensive, but your income is not growing by 20-25%, well, you can start to see why that's a problem. While at the same time, between 2019 to 2024, we saw the stock market grow by around 80%. So investors got a windfall. Not only did investors see their wealth grow faster than incomes, but they also saw their wealth significantly grow faster than inflation. This is why I talk about financial education so much, because investors are the ones that win in this economic system. This does not mean that investments always go up. We know the markets go down. We just saw the biggest drop in the stock market since 2020. It is a part of the process. But what financially savvy investors understand is that when markets go down, it creates buying opportunities. When markets go up, that creates wealth building opportunities. And the problem that so many people have is when you see these volatile markets is we get emotional. And it's easy to do because of all the financial news out there that they talk about how markets are falling, the economy is going to collapse, and all these crazy things are going to happen, so people freak out. You go down this rabbit hole of negativity and bad things happening, and then you panic, and now you start to make severe decisions with your money, which can end up hurting you. Now, this doesn't mean that we're not going to continue to see markets drop. This does not mean that we're not going to see a recession. What I'm trying to tell you is that's a part of our economy. Recessions are a part of our economy. Market crashes are a part of our economy. And for the financially savvy, they love market crashes. Wall Street loves recessions because they allow you to buy great investments at a discounted price. Now, I'm going to be very honest with you here. When the 2022 market crash happened, I bought a lot of stocks. When the 2020 market crash happened, I bought a lot of stocks. When the 2008 real estate meltdown happened, I bought a lot of real estate. During those downturns, I was able to buy some of the best investments that I've ever made when most people were panicking. In 2022, we saw the stock market fall by around 20%. A lot of people freaked out, but it also created a great buying opportunity. And what I want you to do is to not get caught up in the emotion, not get caught up in the excitement, not get caught up in the greed, but rather look for the opportunity. Because the one question that Wall Street always asks, no matter what's happening, is where is the money moving? See, a lot of people like to get caught up in the political side of things. They like to get caught up in the emotional side of things. They want to argue and say, this is right, this is wrong. I don't want you to argue about right or wrong. I want you to figure out how do you get rich. Because at the end of the day, I don't care if you're part of the red party or the blue party, everybody's a part of the green party. And I'm not talking about the whatever green political party it is, I'm talking about money. Now, look, Hear me carefully. I'm not saying money is the only part of life, okay? There's a lot of things that are important in life. I want you to be physically healthy. I want you to be mentally healthy. I want you to be spiritually healthy. But I also want you to be financially healthy. Because a lot of us, myself included, did not grow up learning about money. We didn't grow up being told about how financial education works or how investing works. Instead, we're told to get a good job, study hard in school, and then figure it out. Well, here's the reality. What wealthy people understand is you have this whole world of formal education, and then you have this world of financial education. The wealthy and the people that become wealthy understand this financial education, and they understand how to invest their money. Period. It doesn't matter what job you have. It doesn't matter how much money you make. It doesn't matter what type of degree you have. If you understand this financial education, you can have financial freedom. Period. Here's the difficult part. We're never taught the side of financial education. So we assume that just because I work hard or have a good degree that I should become wealthy, but that's not how the world works. That's why it's so important for you to understand this, because I don't care what you do. If you're a truck driver, if you're a doctor, if you're an executive, if you're an athlete, we have all types of people that watch this channel. We have celebrities that watch this channel, and we have people that are truck drivers or teachers and whatever watching this channel. I don't care what you do. I appreciate you working hard. That's the first step. But what I want you to understand is regardless of what you do, I don't care what it is, you have to understand how money works, because at the end of the day, it costs money to eat. It costs money to feed other people. And you want to understand this so you can take better care of yourself, you can take better care of your family, and you can take better care of your community. And when you see these wild swings, people panic. I want you to stay calm and find the opportunity, because that's where the wealth can be built over the long term. Now, there's a good chance we're going to see a lot of volatility in the coming weeks, months, and or years. But if you're willing to stay calm, continue to live below your means, keep investing your money for the long term, chances are, if you are investing your money in good places, you will be able to grow your wealth. Period. You've heard the saying, buy low, sell high. Well, that requires you to actually take action when things go low. And we don't know how low things will go. We don't know how long it will last. We don't know what's going to happen with tariffs. We don't know if we're going to enter a recession. We don't know how bad the recession would be. But we know the game. We saw a market crash in 2022. We saw a severe recession in 2020. We saw a severe recession in 2008. We saw a severe recession in 2000/2001. Each time, markets recovered, and the people that went against the grain found the opportunity, invested in good assets, were able to build a lot of wealth, while everybody else missed the opportunity. That's why I want you to understand the game. That starts with you removing the emotion, not spend all of your money, have money to invest, and then know your strategy. Now, listen, I got to give you the disclaimer. I'm not a financial advisor. I'm just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube, but understand the game. It's not all about money, but money is an important part of life. You want to be physically healthy, mentally healthy, spiritually healthy, but also financially healthy. And that starts with you understanding the game of money, understanding the game of finance, because Wall Street understands it. They get rich. I want you to know the same game that they play. And that's why I created Market Briefs as a free resource to help you stay up to date on what's happening in the financial markets. And again, when you join Market Briefs, you also get a free masterclass on investing your money. A link is for you down in the description. And with that, I'll see you on YouTube tomorrow.